Some good news might be coming to a Bowser near you. Oil has suffered its biggest monthly drop since COVID was invented, of 15% in November. It's a confluence of Omicron hitting the market just as a bunch of oil producers agreed to release stockpiles because prices were too high, proving you can never time the market. Omicron has given all markets a bit of a toweling this week. The ASX has ended marginally higher today, but it's off for the week and has now lost ground for 8 of the past 12 weeks. BHP moved a step closer to its own Brexit after its board agreed to delist from the London Stock Exchange. And TPG tanked after founder Mr Teo offloaded 3% of the company's stock. Hong Kong's market was dragged down by tech stocks after rideshare firm Didi announced its own delisting from the New York Stock Exchange in response to a crackdown by authorities in Beijing and in the US. The Aussie dollar continues to bump along the low 70s, while fresh on the heels of Glasgow, estimates for growth in solar PV is through the roof. Now, lithium has been the metal du jour when it comes to clean and green investment on markets, largely thanks to speculation. But as Macquarie research points out, growth in solar is going to supercharge demand for the more boring old school metals like aluminium and copper. For context, PV cells currently account for around 3% of the copper market, and that's only going to grow. And while we're talking commodities, this week's GDP figures showed it's been a pretty good time to be a farmer if you made it through the floods and the plagues. That's finance.